So I hate to say I told you so, but I really did see this one coming. It's not often that I actually get out too far in front of these, but when Trend and Shavers, aka Pirate40, was charged by the SEC essentially with securities fraud, that sort of sent out a bat signal that maybe there was a problem. So let's back up a second. Bitcoin is a currency, but people also like to denominate stock in it. And to this point, it's been done on kind of unlicensed and unregulated exchanges and in a very like early Mt. Gox, no compliance whatsoever fashion. This is a problem, of course, because securities, regardless of what they're traded in, as far as the SEC is concerned, fall under their purview. So by not submitting to regulation, it seems like they had a problem there. And lo and behold, BitFunder is actually closing. I'm wondering, guys, do you think that there is any sort of future for this type of distributed equity mechanism, or are exchanges that are centralized like this just impossible?
Maybe if it's outside the U.S., I don't know.
I think distributed equity exchanges are not only possible, but they can be implemented without counterparty risk entirely on the blockchain, without a corporation, without a central anything. What we should be looking at is how do we implement distributed equity exchanges as blockchain features, as blockchain applications, not as companies.
So then are we just too early for this? I mean, like, because again, you can see how with Bitcoin, there's a path that's followed with a lot of these companies or a lot of these concepts. It's not necessarily companies because multiple companies will come and go trying to do the same thing. And as one dies, then, the other one tries to solve that problem. And if they succeed, then they continue on. And if not, then they fail and somebody else tries to solve the problem. So, I mean, how far away are we from that type of blockchain-like solution?
Well, at the moment, we're still living the era of there's nothing in finance I don't think we can solve with a crappily designed PHP website. That's the era we're in. And so pick a problem in finance. Someone thinks they can solve it by writing a few lines of PHP. I think it's going to take a bit more than that. I think we're still quite far from the level of maturity in the transactional language that we would need to build those overlays, but they're coming. We're already seeing some of the examples with things like Mastercoin and various other overlay protocols that are coming along.
I mean, this is not the first time that this has happened. We've seen things like, I think the first one that came out, this would have been, 2 years ago, would have been the GLBSE. I don't remember what that stands for, but it was something. It was basically
Global Bitcoin Stock Exchange.
Global
Bitcoin
right? Stock Exchange. That sounds right. Yeah, the character who ran it for a while was Nefario. He was living in China at the time, and so it was sort of interesting to see that first exchange actually come out of China. By putting things onto the blockchain, essentially you remove the company, and by removing the company, you remove the risk because the company is the risk rather than anything that it's actually doing, right?
Well, no. If that company represents a counterparty to the transaction. So instead of going A to B, you're going A to B to C, and now you have risk in that B may not complete the transaction. So A and C are not your only risks anymore. That's the issue, is that you're adding another layer to the transaction. If the transaction can be encoded in such a way that the two parties that are, for example, selling equity shares to each other don't have to go through any clearinghouse, and the recipient of those shares can validate that they have received them on the blockchain and can verify that transaction is irrevocably redeemable. That means that at any moment in time, the owner of the necessary keys can go and redeem that transaction to get their equity. There is no other counterparty involved or other counterparty who could mess up the interaction. And so that's the advantage of the blockchain, is that once you have that transaction on the blockchain, it is a guarantee that in the future, at any point in time, you will be able to redeem that, and no one can take away that ability from you. If you invest that trust in a third party, then the legal system starts getting involved. And it's no longer a matter of do you have a verifiable, spendable output that you can irrevocably redeem at a point in the future. It is, can you enforce a contract with a third party? And that's in the legal realm, and that opens a whole other barrel of risk.
So if we're talking about this in the context of a blockchain-like solution, does that remove legal risk? I mean, from a technical standpoint, it seems like it shouldn't necessarily matter what you're denominating in. It should only matter what's actually happening. Like barter is still taxable.
Well, it's not a matter of taxation. It's simply a matter of if I can prove that if I can see the transaction on the blockchain and I have the necessary tokens to verify that transaction, either keys or in the case of shares, some other proof of ownership, which will verify that transaction. That means I can verify it anytime in the future to redeem that money, and no one can stop me at that point. So The legal risk is basically not whether I can redeem the transaction. It's not involved in the transaction at all. I can basically do that whenever I want. So that removes any counterparty risk because the only input that's required into the blockchain in order to execute my transaction is the input I have and nothing else.
Obviously, there's counterparty risk involved in the analogous type of transaction that's in the legacy banking system, right? So people are willing to accept it or maybe at least put up with it in order to do this kind of trading. But should they have to put up with the same kind of risk when they're dealing with Bitcoin?
They should not. I mean, that's one of the main benefits to this system is that it takes things that up to now are only solvable in the legal realm and it makes them solvable in the mathematical realm. So, you don't have to sue to get your money. You have to provide the answer to the puzzle that's locked it in the blockchain. And that's the only requirement. And it is fully sufficient to redeem your result. So people are not yet used to that. And also they don't understand the power of it. Removing the risk of a legal involvement with a third party, a counterparty, is a huge part of the cost of doing business. And so if you can remove that risk and streamline it, then a lot of the assets that you hold don't have to face a premium, which represents the risk of the counterparty defaulting or messing up the transaction.
So, Andreas, is this what Mastercoin and BitShares are attempting to do?
Yes. Both Mastercoin and BitShares create equity transactions on the blockchain that are irrevocably redeemable. You can prove that you can take your shares and go anytime you want. The companies can go away. The companies can be completely uninvolved. All the necessary requirements to redeem your equity is within your own keys.
So if the Mastercoin Foundation winds up dissolving after they've created the protocol, then it doesn't really matter so long as the protocol's out there and it doesn't actually break.
Exactly. And that's enormously powerful. It's enormously powerful because now you've removed all of the uncertainty that's created by a legal proceeding and turned it into pure mathematics.
So how will the regulatory environment deal with something like that? I mean, I can see that there isn't, again, just like Bitcoin, it seems like there just isn't too much that actually can be done. But at the same time, that doesn't mean that people won't want to do something.
Well, I mean, in some ways, it is worse for regulators because it will give them a glimpse into the fact that this is a programmable distributed asset ledger. And currency is just the first application. So if they were worried about the fact that you can pseudonymously transfer currency anywhere to anywhere without any intermediate stops or any possibility of control or regulation, they'll be 10 times more worried once they realize that this applies to any form of asset, including stocks, bonds, bearer bonds, equities, and things that aren't even registered in a stock market or traditional corporation, crowdfunding shares, or whatever the hell else you want to put on the blockchain. And all of these fulfill the basic requirement that they can be redeemed upon demand simply by providing proof that is acceptable to the verification algorithm of the blockchain, and nothing else is needed. That is the only and necessary condition. Once you think it through and understand how far this applies, yes, it could be a terrifying prospect for regulators. But at the same time, this is not something that is good or something that is bad. As of the invention of Bitcoin, this is something that simply is.
It seems like the exchanges like BitFunder that have shut down or that have been shut down have all been unregulated. But in the situation that you're describing, even though these aren't regulated by the same system, they actually are regulated if you think about it because of, as you said, the fact that the rules are enforced. That is, in fact, the regulation, isn't it? Do we just not need the old regulators? We have the new regulators and it's all automated?
Pretty much, yes. I mean, you have the new regulators and it's all automated. The problem is that the regulating algorithm is net neutral. It doesn't care about the content and it doesn't care about the source or the destination of the transaction. All it cares about is can the recipient who's trying to spend these transactions or transfer them forward prove the verifiable requirement for that transaction, which is whatever it might be. It might be a private key in the form of a signature. It might be a solution to a puzzle. It might be whatever it might be encoded on the blockchain. So in terms of regulation, yes, this is new automated regulation, but at the same time, it's not really regulating anything. It's simply, can you pass the requirements of the algorithm? And those requirements are extremely low and they're completely irrelevant to the source or destination of the transaction. So if the only regulation you can get is that, then I would assume the regulators would think that's not really regulation.
Well, but the regulation is that you can't cheat the system, right? The regulation is that if you don't have, I mean, is that it's very difficult to commit fraud with.
Exactly. It's irrevocably redeemable, right? So it guarantees your security against that transaction and the security and trustworthiness that you can't double spend or double redeem to the entire network.
That's not really the kind of regulation that the regulators, the legal regulators, are looking for.
Right. Exactly. This will leave them far dissatisfied for what they're trying to do. And what they're trying to do is impose political controls over the transactions, controls that have nothing to do with whether the assets are owned by and who they're owned. There are meta regulations that have to do with the politics of it all. And those they can't apply because those meta regulations that deal with the political aspect of money are all third-party counterparty risk. That's what it means to have counterparty risk, is that the regulators can suddenly tell you that an asset you own, you don't own, or that an asset that you own, you can't transfer. And that kind of risk, the blockchain completely obliterates. It gives you very little in return. It gives you verifiable transactions, and that's it.
I mean, that's a really interesting point. I don't know what's going to be scarier to the regulators, the currency side or the security side. But one way or the other, it seems like we're kind of going to have a better picture of what's going to happen within a couple of months, because I don't know if you guys saw this, but there are a number of hearings planned. I believe that there are 2 currently scheduled, going to be taking a look at this problem, quote unquote, of cryptocurrency and pulling in, I'm sure a who's of names to talk about it. This clearly was inevitable, but do you think this is good or bad?
Well, it definitely seems like they're starting out with some conclusions already drawn. Isn't the title something like The Risk of Virtual Currencies? They've made it sound really scary. And so, I mean, that really shows what mindset they're kind of going into it with. Despite all the claims by, the Bitcoin Foundation and other people saying that they've been talking with regulators and it was all positive and it seemed like they had reached some understanding. It seems like there are definitely still a lot of people in the government who are coming at virtual currency and Bitcoin with a very negative view to start out with. And frankly, that's a bias, right?
Exactly right. And I think this will be a good opportunity to educate, but we won't reach any conclusions. As you point out, Adam, this whole series of investigations, hearings, whatever you want to call them, have come at it with some very specific framing. And this framing is both extremely narrow. It sees Bitcoin as a currency, and it completely misses Bitcoin as a payment network, Bitcoin as a protocol, Bitcoin as a means for a distributed asset ledger that can be layered with other protocols and enable all kinds of automated and transactional trade. So it's very narrowly focused to Bitcoin as a currency and very narrowly focused to Bitcoin as a currency presenting risks to the legacy system. So these hearings will completely miss the point. They will completely fail to both understand the risk that this poses to the legacy system. So in one way, they're underestimating how bad this is for legacy banking and legacy financial systems in terms of their control. And at the same time, they're going in with such bias that they will be completely unable to see the positive aspects of removing an entire layer of risk and how much that can add to the value of transactions and remove costs from economic trade. So yeah, these hearings will result in absolutely nothing. They're a show. They're maybe going to educate a few lawmakers in the very, very narrow aspect of Bitcoin that they've chosen to talk about.
So then were we wrong? Because I think that, the foundation pretty early on said flat out that they were interested in interfacing with Washington as much as possible. And there was money that was planned to be thrown at hiring a lobbyist or lobbyists to kind of make that happen. Do we think that if, they had gone forward and done that instead of just having, members and volunteers and things like that go and interface with regulators, do we think that might have helped the situation? Maybe the framing would be a little bit more friendly if there had already been lobbying going on?
No, absolutely not, because this framing is coming from very, very specific interests and a very specific and very narrow worldview. And that worldview is what's good for the banks is good for America. What's good for the New York Stock Exchange is good for America. And when the banks and the stock exchange and various other parties come to us with millions and millions of dollars of lobbying and tell us this is something we should fear, we will fear it. And we will fear it before we listen from any of these little lobbyists who are coming along. So It's not going to work from that perspective, but I guess it's better to try to educate them than to step away from the conversation entirely. In the end, it really doesn't make a difference. The blockchain will continue to exist regardless.
I'm not sure if it's even better to try to educate them, because I think what I see happening is there are going to be some people claiming, authority over everybody and the way that they use Bitcoin and the way that they use money, who believe that they understand and they know a lot about Bitcoin, but they really don't, right? But they're going to regulate it anyway. So I don't know how much value I see in trying to, quote, educate them, because I just don't see anything good coming out of it for the end user.
Well, it keeps them busy for a while, which may distract them from passing immediate regulations because they don't understand it. But I would agree, Stephanie. I mean, if there is a value there, it might be marginal. In the end, they are going to try to regulate and control something that inherently they can't control.
And frankly, don't have the rights to control. I mean, that's the other thing of it, is that, regardless of what happens in these hearings, ultimately, this is a very, very small proportion of the population that'll eventually use it. I think that the stall tactic actually is probably, that's the best possible scenario here, right? Because if we can just wait, then, the problem is solving itself. The fact that the price is doing this, that's all of the advertisement that, cryptocurrency needs. People are looking at this because it's something that's operating in an environment where hardly anything is operating, except for, of course, stocks. If you want to invest in stocks,
Let's be honest, too. The U.S. government thinks that, they can control way outside of the sphere of the borders of the United States. But Bitcoin is a global phenomenon. I mean, it is truly global, and they really can't control what goes on outside of the United States, or maybe even most of what goes on within the United States related to Bitcoin. And so that's going to be a rude awakening for some people, I think.
I think it's hilarious that we're sitting here talking about this, essentially 2 decades after the fall of the Berlin Wall and the end of the Cold War. We're now talking about whether the U.S. government should adopt a fully central planning approach towards regulation of currency and economic trade, or whether they should have a slightly more hands-off approach. So the sheer hubris that's required for the American government to assume that it can maintain regulatory control over the entire U.S. economy, or that even that's a desirable goal. It seems to be completely the opposite outcome of what one might expect. We've learned from the end of the Cold War.
It seems like this is, again, that concentration of power thing, right? It seems like the places where the United States has the ability to have the most impact are the places where financial contributions to a select few, to a ruling class, really can have an outsized impact on what they would be if you instead had to actually convince the people of a country to vote for something. If you can instead just pay off the leaders, then that's much easier. So maybe, again, this is maybe the place where Bitcoin has to thrive is on the fringe, is at these decentralized areas where there is no concentration of power to essentially co-opt in order to get to that point, right?
Yeah, absolutely. Well, what we're seeing here is the fact that up to now, a lot of what we thought was either restraint by the government or respect of liberty and freedom was really simply technological constraints. Once it became possible for them to do an expansive, hegemonic, holistic control of the economy, of our telecommunications, of our private information, etc., they have done what is possible, not what they should do, or constrained by any other considerations other than what is possible. If it can be done, the US government will try to do it. So Bitcoin is one of the first cases where what we're taking back is not political control, it's technological control. We're making it not possible to do the things they want to do. And this may come as a surprise to them.
That's why I think inherently that's what Bitcoin is designed to do. It's designed to find a way around these regulatory controls and these restrictions that the ruling class places on people. And I think that is what Satoshi intended, and that's what the point of Bitcoin is, and the nature of Bitcoin being so decentralized. So that's why I kind of doubt how fruitful a lot of these approaches to make Bitcoin, quote, legit, or have it, quote, grow up, or make it compliant with all these regulations, that it really just cannot comply with because they're not designed for it, and Bitcoin's not designed for it. That's not the
tempting,
point.
though, Stephanie. I mean, this is the key thing here is that we live in a world right now where, for a variety of reasons, the opportunities that are presented to most people out there are very low. And so again, you have something like this that's outside of the system that usually winds up extracting all of that opportunity. And instead, you've got a system that doesn't care what you do with it, doesn't care who you are, doesn't care how many you have, it treats you the same. So I mean, that right there at its core, that's the thing.
That's the most powerful aspect of it. And we have to stop for a moment now and consider the other 191 governments out there. Because regardless of what we think about whether the US should regulate Bitcoin, you have to take this thought to its natural conclusion and say, well, if the US has the means and the political will and the legal basis to regulate Bitcoin, that also means that every other government out there should and does have those means. And I would posit that for many of those governments, we don't want that. Even if you accept that the American government is benevolent because you're wholly brainwashed and idiotically naive, there are 191 other governments that are so obviously not benevolent that you wouldn't want to give them control of the currency. What we should be thinking about is the broader perspective, which is what happens when you remove control over a currency and over economic trade from the 191 countries where perhaps there is less democracy, less availability of economic freedoms, et cetera, et cetera. I think that's how we should position Bitcoin. It liberates the rest of the world. One of the very important changes that has happened in the last few weeks that is becoming very obvious now is the shift in the geographic center of the demographics of Bitcoin. We are now moving east at a very rapid pace, and the center has moved from somewhere in the mid-Atlantic between Western Europe and the United States to now firmly planted in Southeast and East Asia, where the vast majority of humanity lives, and that is the natural geographic center for Bitcoin. This is very important news, because having an entire population that has nothing to do with the Western developed countries and their governments, increasingly this is the middle class, the emerging middle class in China, who are tremendous savers and who have an appetite for foreign currency. Having that population jump on the bandwagon changes things dramatically. We are now in a completely new era of this digital currency. And in this era, the most important thing that's happening is not English. It's not in the developed nations of the West. So, ni hao ma, Bitcoiners.
Yeah, let's talk Bitcoin Mandarin coming soon.
You're not kidding.
Is the Bitcoin price in a bubble? Only time will tell, but one thing's for sure. Bitcoin video passes are on sale. Normally $75 for those paying in US funds. Visit bitcoinvideopass.com and spend only 0.1 to 0.2 Bitcoins, 0.12 Bitcoins at the time this was recorded, to access all the talks and panels from the October cryptocurrency conference. See how easy buying with Bitcoin can be and experience instant access as soon as you've paid without even reloading the page. Check it out at bitcoinvideopass.com.